So at this point, I want to turn the time over to Radhika so that she can actually talk with you about how to build a compliant infrastructure.
Thank you, Jim. And we know that our audience has a lot of information that they can pull from guidance to cannabis-related organizations, webinars. There's a lot of resources out there available to the bankers, and a lot more that we can even cover in an hour. So we are providing as much of a informative session as we can and give you some things to ponder. It is probably more likely than not, even though Jim listed that about 60 banks are actively banking marijuana or cannabis-related banking, it's probably more likely than not that you probably have some of this business in your portfolio as it is. I'm going to spend a few minutes now talking about it from a risk professional perspective and things that you need to consider. It's all intertwined, things that you need to consider in order to have a compliant, and you can call it MRB, you can call it CRB, but in order to have a compliant CRB program, there's several elements. You need to have the governance structure, which is the board and regulatory requirements. What are your internal resources going to look like? As Jim mentioned, do you outsource some of it, or do you, add a bunch of BSA analysts, for example? What kind of compliance monitoring tools are you going to use? What kind of technology are you going to use? What kind of pricing analysis have you performed? What kind of services are you going to be offering? And to how many tiers or what level of risk are you willing to take? And then, of course, your policies and procedures. At the heart of it all, and as Jim has shared, you must truly document the discussions, the risk analysis, to management and to the board level. The board truly must understand all the risk involved, including the risk of not banking MRB and CRB. While this is going on, you must also maintain open lines of communication with your examiners. I recommend frequent correspondence to give them periodic updates of where you are in the process, what are the decisions you've made, what type of risk assessments you've completed, and the discussions held at the board level. And if available, try to get those non-objections from the examiner so that you can keep moving forward. So now that you've decided to move forward, I highly recommend that you establish a committee, because this can't be done in a vacuum, and there are multiple areas of the bank that are affected. You must, as I said, establish policies and procedures, develop enterprise risk management framework, complete risk assessments, determine your staffing, and determine how much you're going to charge for marketing, services, etc. Other considerations that we highly recommend is, in addition to evaluating from an enterprise risk perspective all the risk, you must first start off with a product risk assessment that will essentially drive the elements of the ERM program. Then consider whether or not you want to make this a standalone program or incorporate that with your BSA program. Regardless, you're going to have an extensive MRB CRB policy. Whether or not you incorporate it with BSA, that's up to the bank to make that decision. But included in that is another risk assessment, your updated BSA risk assessment. Another consideration is, now that you decide, okay, I'm going to bank MRB or CRB, what are your liquidity considerations and your correspondent bank considerations? Many correspondent banks will issue you an AML certification requirement on an annual basis. And I have even heard that if a correspondent bank is aware that you are currently, in today's environment, banking MRB or CRB, they may discontinue their relationship with you. So that's something that you need to consider as part of the risk assessment process. Currently, many insurance policies may also have a clause or provision that prohibits the ability to bank, as it stands today, MRB or CRB. Again, those are conversations you need to have with your insurance provider to find out whether or not you need to add, or whether or not they'll be able to insure you going forward. And lastly, once this is all said and done, of course, you're going to have a BSA audit. You're going to have an audit of your program, And you're going to have an audit of possibly your model and your validations and your calibrations of your model. What I would recommend you do is really spend time interviewing your internal audit firm to make sure that they have a team that has the requisite experience to understand this new risk profile of your bank. Next, you have to consider the internal resources and the structure of what it's going to look like. We all know that an effective, qualified BSA officer is a key pillar requirement. But I guess the next question would be, does your BSA officer have this requisite skill set to manage CRB and MRB? So that is something that you should evaluate a part of your risk assessment. Next, will your BSA team do the compliance monitoring and testing and evaluating, or are you going to use a third party? After that, who's going to be doing the SAR filing and miscellaneous things like that? Next, who's going to bring in the accounts? And how are they trained and how are they qualified? Are you going to be offering it through the BDO sales team? Are you going to be offering it just through new accounts team? Regardless of how it's promoted, offered, or collected or brought in, who does the work? Who will perform the site visits? Who will gather the due diligence? Needless to say, there's going to need to be a lot of training. And then finally, as Jim referenced earlier in the discussion, the use of vendors. There are quite a few vendors, including the two that you see today, that support this industry, from the development of policies and procedures to offering Cash Vault to providing very sophisticated software to help you manage the risk. So given that, in vendor selection, my recommendation would be to look into a variety of vendors to help you partner and develop your internal infrastructure. Make sure that you, just like you do with any other vendor due diligence, make sure that you perform your ongoing due diligence and they meet your requirements. Make sure your AML software is capable of accepting and offering this heightened risk product. Again, as I talked about with the internal audit, make sure your internal audit provider has the requisite skill set to provide you the services you need. And then in terms of your vendor management practices, if you're going to solicit the assistance of a software to help you with your compliance due diligence, make sure they meet the requirements and also have a SOC 2. With that, I'm going to hand it back to Jim.
In a compliance program reconciliation for cannabis, you have a very critical seed to sale reconciliation. For BSA AML purposes, you're receiving deposits that you need to understand those deposits are coming. You need to go back one slide. I'm sorry. You need to be very, very clear that the seed to sale, what is occurring at that seed and sale inventory is matching with the deposits that are involved. That is your AML structure to assure that the cash that is being received is aligned appropriately. The point of sale integration will show you that information. It will provide that information for you. In addition, the cash in transit shows the cash is being picked up and recorded by the armored carrier, and that is part of the deposit structure, if that is the selected format for the bank. So the next slide. The SARS and red flag monitoring and reporting compliance are a critical part of this service structure. The systems for that are really important to tie the prior elements together with your BSA reporting requirements. For the FinCEN reporting requirements, as you notice, there's 3 separate types of reporting you're doing. The one is an ongoing deposit reporting that is showing each time that there's a transaction and reporting that's occurring from the marijuana-related business. The second is when you see a red flag item that's occurring. If, for example, the entity is depositing significantly more money than they ever had in inventory in cannabis, then you probably have a money laundering concern that has to be vetted. The red flag issue is critical in that reporting, as you noted in the prior information on FinCEN. The cash velocity monitoring is also extremely important. That provides a great deal of information for FinCEN reporting, specifically around the SARs. Is reporting used to identify potential marijuana priority type of SAR filings that are involved? Having that holistic structure of red flag monitoring and reporting needs to be part of your systems. And as Radhika pointed out, we have those type of systems available. We have the type of services and systems that can support you in this banking endeavor. Next slide. On final thoughts, banking marijuana is not for every bank any more than any or all products fit every bank. There are a few considerations. The banks that have taken this forward today normally have board members or investors or executives that have a personal interest, generally an understanding, a greater understanding in medical marijuana. They have an entrepreneurial strategy and are willing to explore and see future product possibilities. The banks, to a fault, almost all of the banks, keep this very quiet. They don't advertise the product, which goes back to what Radhika talked about earlier, is how are you obtaining your clients? And generally, the issue of obtaining clients is not difficult right now because most cannabis-related companies are looking for banks that will support them. The banks generally have, a $500 million asset base at minimum. That is because many of the smaller banks started in this capacity. Most now are at 1 billion. They need to have a tier 1 capital of 9% or greater. While there's no regulatory publication of that, structurally, that is one of the items that, as in my discussions with the various regulators, they point this out. They generally recognize and educate themselves in the area of marijuana and clearly understand the bank-related risks. And that's at both an executive and a board level. And generally, they utilize strong third-party service providers to provide the fintech services to mitigate the risks, allow for dashboard reporting, UI reporting, and support strong audits. They limit the startup clients to 1 or 2, and as a pilot project, and then they review the scale and growth following the first safety and sound audit. Ready to go?